Hello and welcome everybody. I'm James Leichter from Aptora. Thank you for being with us today. Happy New Year, by the way. Happy New Year is a good time to be thinking about looking over your books and making sure that you are ready for the new year. So that's what we are going to concentrate on today. We are going to be talking about how to go into Total Office Manager and look for accounting issues that need to be addressed. And I will give you a guide, a nice guide. We'll go over that in a moment. I'll give you a nice guide. You don't have to take a lot of notes. Most everything I say will be in the guide. And of course, we're recording this as well. So we are going to start with opening Total Office Manager. And tell you what, here, I'm going to bring over Microsoft Word too. So this is let me resize that. There we go. This is the document that we will give you. We'll put this in the chat notes area and you will be able to download it. What we talk about in this document is a monthly review, a quarterly review, and an annual review of your accounting system. The monthly review is done each quarter in addition to the quarterly steps, and the annual review consists of the monthly review, the quarterly review, and extra steps for year end. Let me show you how the document is organized. The what's inside is a quick table of contents, and we start with the preliminary review. During the preliminary review, we want to start with bank and credit card reconciliations. Every month, you should be going to banking, reconcile account, and picking a bank account or a credit card account until you have them all finished. The bank reconciliation for many of you is not a big deal. You do it all the time. I don't need to spend a lot of time talking about it. For the rest of you, though, let us all tell you, bank recs are super important, absolutely critical to good bookkeeping and accounting. Any accountant should tell you that. We all believe that. It is absolutely important that you do a good bank rec. Now, you remember the old days where the bank sent you a statement, and to do the rec, you turned over your statement and they had a little worksheet. It really just comes down to, well, let me just open this real quick and just show it to you while I'm talking. All right, so this looks very much like that worksheet on the back of your bank rec, this looks like the bank rec worksheet on the back of your bank statement in the old days. You essentially are comparing what the bank thinks your banking activity was with what the software thinks your banking activity should be, and you reconcile the two. Sometimes the bank is correct and we forgot something. Oftentimes the bank makes a mistake and we have to deal with that. But this is the opportunity where we are double checking all of the transactions in your accounting software and making sure that the bank has things correct, and they do make a lot of mistakes, trust me, and that it matches the accounting program. You would do this same process with each of your bank accounts, and then you would do this process with your credit card accounts. In order to do that, to reconcile your credit card accounts, you would go down to Manage Credit Cards, and you can, first of all, verify and pay. Let me hit this box here. Move that over. Couldn't see that pop up. This form popped up asking me if I would like to make a payment on a credit card balance. I'll explain that since we're in here. Let's say you're running up towards your credit card limit and you need to send them some money, but you're not quite ready to reconcile the account. Then you can check that option. Otherwise, we're going to hit reconcile credit card, and the same thing pops up. It looks like the same form. It really is. You're picking a credit card account, and the same type of form pops up. This one had very little activity. Now, one feature that's very handy in here is a save button. If you are in the middle of a bank rec and you realize that you have to fix a transaction, and maybe you want to get to that later, you don't have to lose all of your work. This has been in there years, but when we first put out the software, we didn't have a save button and people were very frustrated. They would leave the form, come back, and lose all their changes. So be sure to hit the save button to save what you have. Then you can leave the form up or close it, go fix that transaction, come back here, and move on with your bank rec. Oftentimes what you're doing is you're entering transactions that we forgot to enter, especially online transactions, and we are also adjusting amounts. Sometimes we have a fat finger, a typo, type in the wrong amount. Turns out the bank was correct. We go fix that transaction, we come back and repeat. You want to do this, like I said, every month, certainly within the next 10 or 15 days of January. You should have December's reconciled. Hopefully you have November and October's reconciled, and it won't be a big deal. Your first bank rec is always the most difficult. If you haven't been doing it, it'll take a long time typically to do that first bank rec because you may have many, many months, could even have years to check. But once you're finished, then it's easy to come in here and do the bank rec. Incidentally, you can do your bank rec all month long. You don't have to wait until the end of the month. You could go in there every week or so and get a start on the reconciliation. That way, when you come in at the end of the month and you feel like all your transactions are in, you don't have the entire month to deal with. That is especially handy with credit cards, where perhaps you have a lot of people in the field using credit cards and you want to keep up with that rather than tackle all of it at one time at the end of the month. All right, if you have any questions about that or anything else, you can put those questions in the chat box and I will address them as we go on. But I'm going to assume that you know a little bit about the bank rec, and I won't talk about that topic as if we were training on it, because that's not really the purpose today. It's not to train on the features. Speaking of training, keep in mind, we have a giant user manual that's updated and current. It's almost 700 pages. Be sure you've downloaded that. We have about 1,000 pages of help on the website, aptora.com. If you click support, go into that area, you can search. When you open a form in Total Office Manager, you can push F1 on your keyboard, and that will take you to the help topic of the form that you're looking at. So just keep that in mind. There's lots of help available, lots of reference material. And there's a ton of YouTube videos as well, and this will be the latest YouTube video. Okay, now, looking at my guide here, hey, one special treat in this guide is the owner's checklist. So let's say you're an owner and you're not an accounting nerd. You don't want to be necessarily an accounting nerd, but you do want to be sure that your books are kept properly, that nothing is going on without your knowledge. Maybe you want to go in and check things out for yourself. I have a special section in here just for the business owner called Quick Financial Checklist for the Business Owner, a 20-minute weekly routine. That's all it should take. 20 minutes a week. You as the owner can go in and get a really good idea of your company's accounting, bookkeeping, finances, performance related to money. All right, let's go. Let's click Vendors and go to Receive Items List. If you are using this feature, then you probably know when you enter a received items, when you receive items, you use the Receive Items form. You are entering items into inventory. And when you're doing that, you're creating a liability, an accounts payable to that vendor. When you get the bill, you are converting the item receipt into the bill. And the software tells you that. It'll say, hey, you're entering a bill, you have an item receipt for the same vendor. Is that what you're trying to do here? Yes, I am. And you probably click that button without even thinking about it. But if you were to enter a bill and ignore those messages, then you would leave the item receipt behind. The item receipt would still be in the software. So Number two, after bank recs, go in and make sure that you don't have any old item receipts that are invalid. Typically, an item receipt's not going to be more than a month old, maybe 2 months old, because remember, you took a packing slip, you entered an item receipt so that it would be in inventory and that your job costing would be updated, and then a bill came. And when you entered the bill, the software knew the bill was for the item receipt, it told you about it, and it got rid of the item receipt for you. It converted it into a bill. It is possible to enter a bill that you received in the mail, for example, enter a bill and forget about the item receipt. That will create a double liability. You'll be increasing your liability when you enter that bill, but also you're going to mess up your inventory counts because you're going to be entering those things twice. When you create an item receipt, you are changing the quantity on hand of your inventory items, and you're serialized if you're using those, and you're creating a liability for the money that you owe the vendor. That would be duplicated if you entered a bill and forgot about the item receipt. So go to vendors, item receipt list, and make sure that the item receipts are legit. What if they're not? We talk a little bit about this in the guide, but the guide assumes that you know how to do these things. What happens if you have an old item receipt and it's not real? Check to make sure that you entered a bill for that item receipt. You should be able to find a bill with the exact vendor's name, probably the exact amount or very close to it. Hopefully you'll be able to notice that the two are the same things, especially if it had serialized items on it. So let's say that you have found the item receipt, but you also found the bill. You no longer need the item receipt. I mean, you could delete the bill, recreate the bill, backdate it, and get rid of the item receipt, but you don't really need to. At that point, you can just get rid of the item receipt, void it. Put in a good memo as to why you were voiding it, and then void the item receipt. And that'll fix it, not a problem. Well, let's say that you can't find a bill. Now you have to ask yourself about the legitimacy of the item receipt. Is the item receipt legitimate? You should have a packing slip somewhere where the vendor, the supplier, gave you a piece of paper acknowledging that they delivered it or you picked it up. Packing slip, we typically call that. You should have one of those somewhere. Hopefully you scan that and you would go looking for it and try to find out if it's legit. But that's your first thing, is to find out if the item receipt is legitimate. It should be tied to a purchase order. So go back and look at that purchase order and start there. Is the purchase order legit? Well, why wouldn't it be? Well, it's possible that the order got canceled. Maybe the item receipt was entered by mistake, or it was entered and the transaction got canceled somehow. It should be pretty rare, but it's possible. Let's just say, for the sake of discussion, the item receipt is not legitimate. Then it's the same process. You would void the item receipt, put in a really good memo as to why you did that. I would also go into the vendor's contact log and add notes about that, and just void the item receipt, and problem solved. What if you never entered an item receipt, but you did enter the bill? What do you do then? Don't worry about it. You don't need to enter the item receipt. The way we like to do this is we like to create a purchase order. We take delivery of the items. They hand us a packing slip. We verify the packing slip against what we picked up or what was delivered. That is then matched to the purchase order, and then we enter an item receipt. Now we know all of that's legit. The bill comes in the mail. We're just simply matching the bill with the item receipt, which happens to match the packing slip, which happens to match the purchase order. That's the correct flow. But if you forget to put in the packing slip and you've put in the bill, you're fine. What if you forgot to do all of that? You forgot the PO, the item receipt, the bill, then just enter the bill. You don't have to enter the item receipt and then the bill. I would prefer that you create the PO so we have a record of that, but just put in the bill and you don't have to worry about the rest of it. And I think we have a question.
Alfred is asking, what about when you purchase material online? How do you process the material that was paid for when you receive the product?
So the question was, what if you buy things online and pay for it online, perhaps, and you receive those items, then what is the process? We still start with a purchase order. So let's say that we decide to buy something from xyz.com. We need a purchase order. So I would say to you, I need a purchase order to buy materials for the so-and-so job. That is all the same. We create a PO, we select the correct vendor, we put in the items, we put in the notes, as much information as we can in the PO. Then we go online and we order everything. Once we have done that, then we would print out a receipt for that purchase. Now, I'm going to assume for a minute that you used a credit card, you paid it, and we're done. So at this point, we don't need to enter an item receipt. We would then enter a credit card charge. So that would work like this. We would go to banking. We would go to manage credit cards, enter a credit card charge. And then you would pick the vendor, or pardon me, you'd pick the credit card first, and then you would pick a vendor. And let's see here. All right. Depending on your preferences, it might ask you if you would like to recall the last transaction, meaning make a copy of the last thing you entered for this credit card and this vendor. And I'll say no in this case. Now it's going to say you have a purchase order for this vendor. Are you trying to receive against that purchase order? Yes. Yes, I am. Click yes. So this is basically the same process as the item receipt. I'm presented with the purchase orders. I'll just pick that one right there, click OK. I'm presented with the purchase orders. I select it, and the credit card charge is populated. Now I could go ahead and enter a reference number, which I would find on my credit card statement, or maybe the supplier gave me a reference number. I can always update it later, enter a memo, you know the drill, right? Pick a job, etc. But that's how you would do it, is enter the credit card charge. Now, what about when the bill comes in the mail? Well, I'm assuming for the sake of this question that that's not the process. They're not sending us a bill. We went online, we bought it, we were done. So we don't have to worry about a bill. Plus, this is the bill, basically. We're entering the bill when we enter the credit card charge. The only difference is the credit card paid it, and now we have a liability to the credit card company. And at the end of the month, we'll pay the credit card company, and we will do our bank rec. All right, hopefully that answered that question. If not, just follow up with that, and that'll be fine. All right, so looking through our guide, we have gone through our bank and credit card reconciliations, looking for red flags. We have now looked for credit card, or pardon me, we've looked for item receipts that may have been abandoned or forgotten about. The next thing we want to do is we want to take a look at unpaid bills. So we go to, perhaps we could do a report. We go to vendors. I'll go to the list. I'll go to my bills list here. And if I were to sort by the original amount, the amount column right there, actually, then I would be able to see bills that have been partially paid or not paid. And basically, I'm just taking a quick look to see if there's anything that we forgot about. Is there a bill that maybe we entered, but they never mailed it to us, we never paid it, maybe we paid it and it shows unpaid? We're just quickly looking to see if it looks okay. Are we noticing any bills that should have been paid long ago? The other thing that we want to do is go to vendors and go to the credit list right here. So what we're looking at are vendor credits. Maybe we had an evaporator coil that was leaking. They said, hey, no problem, sorry about that, return it, we'll give you a credit, you can pick up another one and go install it. We did all that and forgot about it. We have this credit on file. And you would find it by coming to this list and looking at the remaining balance. So let's sort by that column, and I'll scroll up, and I can see the remaining balance. So I might have this big credit and I have a remaining balance that could be all of the credit, or it could be a certain percentage of the credit. You're looking for credits that you don't recognize. You're looking for credits that have a balance and you forgot to use that credit. Sometimes the credit will be so old it's no longer valid, or maybe it's a supplier that you no longer do business with and you're going to need to get rid of that credit. There's a help topic on that, but you're going to want to get rid of that credit if in fact it's not valid, if you can't use it. So look for unused credits. This would also be a good opportunity, or a good time rather, to go look at customer credits for unused customer credits. You might have customers that have credits with you and you want to deal with them. You might remind them that they have the credit. Maybe you need to do nothing. You're just waiting for an opportunity to use that credit. That's fine. But what you're looking for are just old customer credits that you need to either remind them to use them, or you need to think about it the next time they pay you, or maybe you have to get rid of it. You have to get rid of that customer credit. It's a good time to do that now. That takes me to a related topic, and that's bad debt. You have a customer that you don't think is going to pay you, or you are sure they're not going to pay you, and you want to either mark it as likely to be bad debt, or you want to just write it off as bad debt. Now, what you can do for the first one, likely bad debt, is go find the invoice or invoices that you think are likely to be bad debt. And let's find one where they owe us some money. Here's one. Open that invoice and go up here to the header area, and you might notice the account receivable account selector, AR account selector. So that's accounts receivable account from your chart of accounts. If you don't see that, there's a preference to expose it. You can hide that from users because you may not want them messing with it. You can then set a default, and then it's set it and forget it. Every time you create an invoice, it automatically picks the default. Nobody can change it. Nobody knows any different. But if you don't see it and you want it there, there's a preference to show it to you. Well, what am I talking about? Why do I care about that? Well, you can add another accounts receivable account in your chart of accounts. Make that a little wider. And you can see mine. So I've created one called doubtful. And if I pick doubtful, now on my balance sheet, I'm going to have accounts receivable, say 100,000. Accounts receivable doubtful, say 5,000. That way I can keep my eye on it. And when I look at my balance sheet, I can consider that money is probably not mine, or at least I shouldn't count on it being mine. So that way we account for doubtful accounts receivable. What happens when they pay you? Well, it'll get paid and it'll come off accounts receivable doubtful anyway. You don't have to go back to the invoice and change it to your regular accounts receivable report. You could, though, if you wanted to. The end result will be the same. It's paid and it comes off your report. What about your accounts receivable report? Just a reminder, when you run your accounts receivable aging report, either one of them, you're picking the accounts receivable account that you want to examine. And you can only pick one account by design. It's supposed to be that way. You pick one account. If you create two, you just have to remember that you're going to want to print an AR aging for doubtful so that you can see what is on it. All right, bad debt. What about bad debt? Let's say that they're not going to pay us. Let's go to menu and go to create, or not create, go to menu and receive payments. There it is. Now I could have gone to receive payments and went and found the customer, but this just saves me some time. So here I am looking at this customer, and I'm going to do a new payment against them. And you notice that I don't have any invoices here to pay. Just keep in mind, when you come in and do your payment, it also cares about the accounts receivable selection. So now I picked doubtful. I picked the doubtful account and it found it. Otherwise, it didn't seem to be there, right? So that's a tip for you. That's probably a tech support call that happens a lot around here. All right, so we have the $318 payment in here. And of course, they didn't actually pay us. So I'm going to type in a memo, bad debt, and we will clear the amount right there. And I'll check the little box. And then we're going to go over to this column called discount, discount date, discount account. We're first going to type in the bad debt amount. And this could be the entire amount, or maybe you're just writing off. I hate that term. You're just writing off maybe the $18. Maybe they sent you $300, or they left off the 99 cents, and you want to write that part off. So it could be all of it or part of it. If it was part of it, you'd put in the amount they paid you, and then you would fix the difference with the same technique. Now, discount date is important. When do you want this to apply? I probably want this to apply last year, so I'm going to pick 12/31 of 24. Discount account. This is your bad debt account. So go find bad debt. I've got my account numbers included here, and I don't remember what it is. There it is, bad debt. All right, so when I hit the save button, what's going to happen is I'm going to remove $318 from my balance sheet, my accounts receivable, doubtful in this case. I'm going to clear the $318 from the account for this particular customer. They no longer owe it. It will come off my reports, my accounts receivable report. The next thing I really want to do is right-click and go into their contact log and make a note as to why they didn't pay us. Do I want to not do business with this person ever again? Maybe. So I want to put in notes about why they didn't pay us. It may be that it was our mistake, or we said they didn't have to pay us. Type in a good note. Now, let's say that they didn't pay us and we're mad at them. We don't want to do business with them anymore. The next thing we want to do, or at least you should consider it, is go into the customer's record, and then you'll go to the accounting, or the additional information tab, or I'm sorry, payment information. Duh, there it is. Okay, we go into the payment information tab, and we can mark them as on credit hold. And when you check that box and hit the save button, let's just do it. It will now put them on credit hold, and you'll see the name of the person and the date to put them on credit hold. On credit hold, no one will be able to create a work order or an invoice and certain other things for this particular customer. You'll get this alert that they are on credit hold, and you can tell them, hey, you're on credit hold because I'm mad at you. You owe me $318. Maybe then you could get paid the $318. If you've already written it off, you can reverse it. But that might help you get your $318, but either way, you don't do business with them anymore. You could also put people on credit hold that are just past due, and you want to leverage the next time they need something from you, like a warranty call, you want to leverage that for collection purposes. All right, so I'm going to hit save and close, get rid of them, and here we are ready to hit save and close and write off that bad debt. If I've done anything incorrectly, we'll get some warnings about it. I'm going to say yes. It didn't like my date. I thought my date was a bad choice. It was a bad choice, but that's okay. All right, so that's been written off, and if I were to come in here and refresh, I can hit the save button. I can close it, reopen it, and it'll reflect the new information. Okay, so we've written off the bad debt. We've also marked some bad debt as doubtful, or pardon me, we've marked some accounts receivable as doubtful, and we have a chat question.
Sandy said, if you put the parent on credit hold, will it do all the sub-accounts also?
So I was asked, if you put the parent account on credit hold, will it put everyone else on credit hold? And you know what? I think the answer is no, but I'm not ashamed to say I don't really remember for sure. So let's go to the customer list and let's go to 24-Hour Fitness, who has children. In fact, they have 3 levels, so it's a good test. And let's put them on credit hold. Save and close and go back to a child. And been placed on credit hold. So yes, it does. It didn't used to. I think that years ago we probably changed that behavior, but yes, it put the entire family on credit hold. Maybe. One more check, Sandy. Let me look and see if the 3rd level is on credit hold. Yes. Yes. All right. So I stand corrected. The whole family went on credit hold. Another question.
If you process a payment as bad debt like you did, does it not show as monies to deposit? How do you get around that?
So the question was, when you write off that bad debt in the way I showed, does it show up as money that needs to be deposited? And let's take a look at that. So let's go to banking, make deposits, and that message tells us that we've been collecting money. We have undeposited funds. What that means briefly is that somewhere, theoretically, in our business, we have cash, check, coin that we haven't deposited yet. That happens when you use the group with other undeposited funds feature in the software, and we highly recommend that because we want to think about money that needs to be deposited. So when we click OK, it tells us that we want to go to the payments form and open that up. And there is the payments form. Now, the question was, when we write off that bad debt, is it something that shows up in this list, and do we have to deposit it? So let's take a look and see if it's in here. And you're noticing that it is not, and it shouldn't be. So you shouldn't find it in here. However, what you could find is a partial payment. Let's say that we wrote off the $18. They sent us a check for $300, and we said, to heck with it. Let's just write off the $1,800 or the $18. Then you would find the $300 in here, but not the 18, and then you would do your bank deposit in the same manner. Another question?
If you take the parent off credit hold, does it take the children off as well?
Back to that credit hold. If you take the parent off, will it take the children off? And so my answer would be normally, well, yes, but who knows? So let's just try it. And this is how I test the software and learn the software. I just get in there and play around with it, try things. Don't assume I know the answer. Let's click Save and Close. Now, what happens is a special password is required to take them off credit hold. This could be the admin password, or it could be a special password that is assigned to each individual user. That way you don't have to give out your admin password. I could tell you what my special password was today and then change it tomorrow. So I'll click OK, because I keep mine empty. Normally you can't have yours empty, but I do that for demo purposes. So I'm about to remove them from credit hold and the entire family. Do you wish to continue? So clicking yes to continue and remove credit hold from the family, click no to only remove the record from credit hold. So I have an option. I can just take the parent off, or I can take the whole family off. And I like 24-Hour Fitness, so I'm going to say yes and get all of them off credit hold. All right, so we have the best of both worlds. You can do the whole family or just the record that you were in. And by the way, you probably know this, but family, I threw that term around. What we're talking about is a parent, like a level 1, and a child, and that you can even have a grandchild, and that's really the term that's used, the technical term. You can have a great-great-grandchild, and that's a family. And so in the software, a lot of times when you're dealing with a report or a feature or a preference, it may apply to just the family members that are underneath it and not walk up to the parent, the level 1. Was there another question?
This is back to the bad debt question. Is that because it's processed as a discount?
Yes. Yeah. The question was, is that because it was processed as a discount? Yes. Yes. Because the discount, the software doesn't see the discount as being money that you have undeposited. I've been having trouble with my voice. I've been sick like everybody else. And going into this meeting, I was doing good. So hopefully I'll continue to do well because I don't know sign language. And you may not either. Okay, moving on then. Was that it for the questions, Will? Okay. So if I go back to my guide, I could just keep moving through the guide, or I can skip certain things. The next thing you want to look at on a monthly basis is adjusting journal entries. Click Banking and go to your journal entry list. Now, if you're the only person that can make adjusting journal entries, then you can probably skip this step. But if multiple people can make adjusting journal entries, then you would want to go in here and have a look. And it's not a bad idea for the boss to come in here and have a look as well. That's in their checklist. What you're looking for, first of all, is, are there a lot of adjusting journal entries? And I'll try to define a lot in a moment. But generally speaking, accounting people will tell you you don't need to do a lot of adjusting journal entries, especially in Total Office Manager where it's so feature rich. There's usually a transaction somewhere that takes care of what you're trying to do. So you'll find yourself needing to enter very few adjusting journal entries. If you have dozens a month, it could be legitimate. It could be. But it's rare that you would do that many adjusting journal entries in a month. I have seen hundreds in a month. I've seen thousands and thousands in a year. Almost always it was too many. But how does that happen, and why is it happening? What do you want to do about it? If you see a lot of adjusting journal entries, that tells you that it could mean many things. Number one, it could mean that there's a feature in the software that you're not taking advantage of. Maybe you're moving money between departments or between chart of accounts, you're allocating overhead or something like that, and you don't know that there's a feature in the software that does that for you automatically. The other thing it could be, and it could be a combination of these things, is that someone's not using the software properly and they're relying on adjusting journal entries to fix data entry issues or accounting problems. Imagine entering a bill incorrectly, adjusting journal entry. Not entering a bill, adjusting journal entry. Your books don't look right, adjusting journal entry. You don't like a number on an income statement, adjusting journal entry. I mean, the adjusting journal entry allows you to just bypass all of the checks and balances in the software and just force numbers to look the way you want it to. So if you don't like the looks of your income statement, adjusting journal entry will make it look better. You can just increase your income. You don't like the amount of money that's in your bank, increase it with an adjusting journal entry. It doesn't mean, of course, that any of this is reality. What I'm trying to do is show you the power of the adjusting journal entry. It was put in the software just like QuickBooks and other software programs going all the way back to when accounting software became available. The adjusting journal entry was typically your last ditch method of resolving something or overcoming some shortcoming in the software. And from an accounting perspective, as it applies to this, we don't really have that many shortcomings that require a lot of adjusting journal entries. What are some legitimate adjusting journal entries? Well, depreciation is one. You might come in and do an adjusting journal entry to cover depreciation. Every year, at a minimum, You put in your depreciation numbers. Usually your accountant will send you a schedule of depreciation and you'll enter those. That's a legitimate thing. But that's typically not where you would go to, say, write off bad debt. Because as we saw, there's a way to write off bad debt properly and have a good audit trail of how it happened and why. An adjusting journal entry is not the place to do things like write off bad debt. Maybe you want to change a balance on a report and you just cannot figure out how that balance was wrong. You don't know why it was wrong. Okay, you can do an adjusting journal entry. Maybe your books are closed and you don't want to go back and mess with anything in the prior year. Maybe do an adjusting journal entry. It's hard to tell you what's correct and what isn't correct. The whole idea is to go in and just look at the adjusting journal entries and ask yourself, what are they? Why are they in there? And is there any reason why we can't stop doing it? Like a feature that we're not taking advantage of. Remember, no offense to anyone out there, bad bookkeepers do a lot of adjusting journal entries. Good bookkeepers sometimes do a lot of adjusting journal entries. But bad bookkeepers, bad accounting people typically do a lot of adjusting journal entries because it's a quick, easy way to fix things that really need to be fixed differently. Okay? You know, as long as you have permission in our software, it allows you to go back and change things. You can go back and open up a bill or an item receipt or a check or whatever and modify it, change it if you have permission. And no matter what you do, you can always go to the audit trail, and the audit trail will tell you everything everybody's been doing. So if I want to go back and fix a check that's 6 months old or a bill that's 6 months old, I can do that. And if anyone wants to know if I did something like that, they can open up the audit trail and search out my name and find that transaction and see what I did. So don't forget, the audit trail is always there monitoring everything. All right, so that talks about the adjusting journal entries. Again, to sum that up, you're just looking for adjusting journal entries that probably shouldn't be there. And if you have any questions, we have good videos and help topics on these things. Just search those out or give us a call and we'll help you. The next thing we want to look for is date issues, problems with dates. So we're going to first go to File and go to your company file information. If you haven't been there before, it's kind of handy. Now there's several different things we can look at. I'm just going to skip several of them and focus on accounting issues. But when you open up the form, you'll be in File Properties. What you want to do is look at the date of your very first transaction. And you can see my first transaction is right here, 2020, January 1, 2020. Don't be surprised if that says 1919 or 2101 or something like that. You could accidentally type in the wrong date and not notice it. That's the whole reason why we put that in there. Look at the date of your first transaction and look at the date of your last transaction. And I have one in here for 2222. Chances are someone meant to type in 2022. By the way, I didn't set that up. That's true, so it needs to be fixed. This is just a demo database, but I'm pretty sure that that just got misentered, probably meant 2022. But either way, I need to go find that. Now, how would I find that? Can I double click? No. One of the few things you can't double click on to get somewhere in our software, but it's easy to go find it. You can open up your various transaction lists and sort by date if you want to, but it's even easier than that. You can go to the general journal and you'll be able to sort by dates automatically. It puts the newest at the top and you'll quickly see the 2222 transaction. But there could be more than one, so the general journal is a good place to go, and that's under banking. So go there and make sure that those dates make sense. Is your general journal balanced? Yes, it is. What if it said no? It would be no in red. There'd be that means that your credits and your debits don't match. They don't add up to the same number. And you probably know they have to. And in the old days, we did a trial balance report. We would try to see if things were balanced, trial balance. Well, the software has that too under banking, but the software should be self-balancing. It should never let you save a transaction, such as an adjusting journal entry that has a debit and a credit. It won't let you save that unless they're in balance. The only time they become out of balance is when something went wrong. Something got deleted and it partially deleted but didn't get fully deleted. Some network problem could have caused that. If you do see that, there's a help topic on how to resolve it, and you can also contact tech support and they can show you some tools that'll help you find the transaction. The fix is usually, not always, but usually resaving a transaction. You'll scan for it, the software finds it, you open the bill, for example, or an invoice, and you make a change to it. You make it think you made a change, like you type in a period and get rid of the period and hit save and close. That typically fixes it. All right, the next thing you want to look at is record count. This will give you an idea of how many adjusting journal entries you have, how many bills you've been entering, how many item receipts you have, etc. That can come in handy. Could be a complete waste of time you come in here, but you might be surprised. You might see that you're not using certain features or that the number surprises you in some way, shape, or form. One thing that's handy is seeing the number of inactive records. And you might say to yourself, we shouldn't have that many inactive records. Database stats, as long as we're here, probably don't need to come in here too often, but once in a while, it's a good idea to run your database maintenance. If your IT people haven't set that up for you automatically, then you definitely want to be running this every week or so, certainly every month. If you are hosted, we do that for you. You don't need to worry about that. There's a help topic on that as well. I know I keep saying that, but we have so many help topics. I know because I wrote a ton of them, if not edited a ton of them. And we have another question, Will.
Last year, our GI was not balanced because of rounding an account that can't be adjusted by the user. Has that been fixed?
So the question was, they were out of balance due to a rounding issue, and it was on an account that they couldn't edit. They couldn't change that account. So then it was asked, has that been fixed? I don't know the answer to that because I haven't encountered that. We can look into that, but I don't know of a situation where we can't fix that by adjusting for that rounding issue. By the way, software like QuickBooks, I say QuickBooks not to pick on them, but we all know who QuickBooks is. They don't have rounding issues because they self-round. They just correct it behind the scenes for you, and you never know where they fix that rounding issue. What is a rounding issue? There are times where you're selling, for example, you buy, say, 1,000 feet of wire, but you sell it by the foot, and you might have 5 or 6 or 7 numbers to the right of the decimal point. Well, things like that, transactions like that can cause rounding issues. By that, I'm talking about a penny here, a penny there. But when you have millions of rows in your general journal, and most of you do, those pennies can really add up. So you will see on your balance sheet, a rounding account gets added by our system, and it should be just $1 or less. It really shouldn't be a big number. If it is a big number, that typically means that a transaction was saved incorrectly, not by you, but it just didn't save properly, and we have to go find it and dirty save it, as we call it. We open it, pretend like it's been changed, and we save it, and the software just redoes those calculations. So if you do have a situation like that, let us know. Send an email to helpdesk@aptora.com and let them know about it, and it can get back to me and I'll look into it. But we should be able to resolve those. Other questions, Will? I'm good? Okay. All right, so yeah, give the company file information a quick look, and you might see something there that surprises you. The next thing that you want to do is go to companies, or company rather, lists, and find your warehouse list. right there. And you might just have one. You may just have one warehouse. But if you are tracking inventory using multiple warehouses, and the use case for that is typically we have a main warehouse, which is our building here, and we supply our trucks who are also set up as warehouses. So we might have, in this case, 13 warehouses. Look to see if any of your warehouses are inactive, right, like that. Now, if you have an inactive warehouse, you want to see if any of those warehouses had inventory items within them. So you want to check to be sure that you haven't left inventory items in a warehouse that's been inactivated. Now, can you do that? Well, there are many reports that will show you what you have on hand, and they allow you, of course, to pick the warehouse. So you would just want to be sure that you have picked those. But another way is to go to the item list and be sure that the quantity on hand column is there. And then you can sort or filter by warehouse, even inactive, and see if there's any quantity on hand for an inactive warehouse. But that's an easy thing to fix. You'll just simply move those items into another warehouse, such as the main warehouse. Even if you're not sure of the count, it's better to move those into the main warehouse, and then you'll reconcile the main warehouse by doing an inventory count later. You'll be doing your normal inventory count, but there's no reason that there should be items within an inactive warehouse. And I've fixed many of those. I've seen that many times. Speaking of inventory counts, hopefully you're doing a regular inventory count, but maybe you don't have time to do that. Maybe that's not something you've been into lately. You don't want to get into it. I beg you just to check one thing: serialized items. That's pretty easy to do. So if you're going to do an inventory count, rather than count up every box, which you should once in a while, if you're limited on time or interest, at least count up all the serialized boxes: condensers, evaporator coils, air handlers. Certain thermostats have serial numbers on them. The reason why I say that is because typically it's a pretty big box. It's easy to go find it. You'll know if there's one of those big boxes on a truck, like a water heater, so it's easy to find them. And that has the biggest impact, typically, on your financials. When you go correct your serialized items and get that all corrected as far as what you have and don't have, that changes the balance sheet pretty quickly. So be sure to count your inventory on a regular basis. Be sure you're doing inventory control. But again, if you're limited on time and you want to get to it later, then at least do the serialized items right now to get your books more accurate. Remember, an inventory part or a serialized item from an accounting perspective affect many things. And if the quantity on hand isn't right, those many things really mess up your job costing reports and your financials. And let me explain. So we have, say, a contactor, and you paid $10 for it. If you miscount that contactor, like you forget to sell it to a job, or you have one on hand, but you actually have two, or you have zero, how does that affect your books? Well, if you forget to put that on an invoice, then we have something on hand that we don't really have, and that affects our cost of goods sold. So we're understating our cost of goods sold. We might be understating our revenue, but let's say we put the revenue on the invoice correctly, the amount somehow on the invoice correctly, then we're just affecting our cost of goods sold. But we're also affecting our asset called inventory on the balance sheet. For every dollar that you're off, your reports are off by $1 somewhere, somehow. So if you have $100,000 in inventory, for real, you know it, you counted it, but your balance sheet says you have $50,000, then your reports are wrong by $50,000. That $50,000 gets spread out, and we don't know the time range. It could be this year, could be going back several years, but at the risk of oversimplifying it, your reports, including job costing, are off by that amount. So that's why it's really important to count inventory and get those numbers correctly. Get those numbers counted correctly. All right, next thing we want to look for is unknown vendors. And I bet many of you have seen this. Let's say, for example, that we are going to be paying our sales tax. So how do we do that? We go to customers, sales tax, pay sales tax. When you come into this form, its job is to tell you who and how much the sales tax is. Who do you pay and how much is it? The first thing you do is pick your date range and you pick your account. And let me see if I can get some info on here so we can at least see something, because we might be all paid up. Okay. All right, so I got some on here, but there's a problem. As long as we're in here, let me show you this too. I've got a negative amount. There's a good help topic on that. How could that be such a giant negative amount? It is usually a matter of the date ranges, but what I wanted to show you was the possibility of a unknown vendor. And there is one right there, unknown vendor. How did we get an unknown vendor? Help topic on it, but long story short, sales tax was collected or paid incorrectly. It's possible that we paid too much, we paid too little, but it usually is a sales tax setup or usage issue. And the same thing can be said for payroll liabilities. If you go to pay your payroll liabilities and you see unknown vendor, that's the same issue at hand, where we have a setup issue and or a usage issue. And you'll want to fix those. No sense talking a lot about them right now because many of you may not have this problem, but if you see unknown vendor, then you have that issue. Now, look at mine though, it's a zero amount. So is that a big deal? Should I worry about it? Chances are there's money in there if I just change my date ranges, but it sees the unknown vendor, but in that date range, it says that I have nothing to pay. It's not due. We had a question online.
How do you recommend removing incorrect serialized items from stock?
How do I recommend dealing with incorrect serial numbers in stock? So we have, maybe there's a lot of scenarios here. Maybe we sold serialized equipment to the customer and picked the wrong one. Maybe for whatever reason in the warehouse, we have serial number 1234, but it should be 5678. How do we deal with that? We've written a really good help topic on that, which covers all these scenarios. But to give you a quick summary of what to do, you want to unwind the transaction at its highest level. So let's say, for example, that we bought the item and we haven't sold it. Then we don't have to deal with an invoice. That makes it easier. We want to go back to the item receipt and fix it there. But maybe there is no item receipt. It's on a bill. So we fix it on the bill. But maybe the bill was paid and it's been reconciled and we can't edit that. So then we have to edit the bill. We have to unreconcile the bill, edit the bill, and then reconcile it. Or we can void it and recreate the bill and we'll reconcile it later. It'll appear on our bank rec. So you want to start at the very beginning when you bought it, but that wouldn't be a purchase order because you don't pick serial numbers on purchase orders since they are not connected to the accounting system and they're not supposed to be. You would go to the item receipt, but maybe you don't have the item receipt because it got converted to a bill. You would fix it on the bill. Now, what if we have sold it? We've sold that serialized item and picked the incorrect item. Now we have a lot more to deal with. We have to go back and change a lot more things. But the best tip I can give you to deal with these issues is to go to company and come down to inventory adjustment, serialized items right here. This will give you a list of all the serialized items that you have ever bought, sold, dealt with. Well, I should correct that, not dealt with. I shouldn't have thrown that in there because you might enter a customer equipment and that's serialized, it wouldn't be in here. More specifically, more accurately, anything you've bought sold, whatever the state is, will be in this list. So I'm looking at not void. We don't have any voided. I'll do show all. Now, if I right click on a serialized item, you'll notice that I've got an adjustment opportunity. Let's click it. You could come in here and discover that some fields are locked down and you can't do anything about it. But that would allow you, this form will allow you to adjust serial numbers. So that way you can put a serialized item in one place, move it to another, for example. Or let's double click on one. And you'll notice what I was mentioning earlier, I can't do anything about this serial number. Everything's locked down because there are transactions associated with it. So in order to be able to deal with it, I have to go to the, if it's AR, accounts receivable, I have to go to the invoice and correct it there. You can remove the serial number and save the invoice. Then you don't have to close it, just hit menu save. Then you can add the correct serial number to the invoice. Let's say that the invoice has been completely paid. What about that? You can actually still change it. Just make sure that you make a note of how much that invoice is for, because it's possible when you delete it and add the correct serial number, you paid a different price for it. So you'll have to make that adjustment. As long as the invoice is the same amount, when you hit save and close, ultimately you're fine. So you can correct it there. Sometimes invoices can't be edited when they are fully paid and the money's been deposited. In that case, you have to go to the deposit and get rid of the deposit. You may then be able to edit certain parts of the invoice, but if you can't, then you have to get rid of the receive payment. You have to get rid of that payment. Once you do that, then the invoice in all cases is fully editable. Once it's fixed, then you put back the payment, being careful to take screenshots of things, backdate things. Once the payment's been put back in, you'd go make the deposit, backdate it. There's nothing to deposit, but you're telling the software something that it already knew before you got rid of that information, that it's been deposited. Just again, backdate everything. So hopefully that answers your question. If you haven't sold it yet, you're going back to the bill. If you have sold it, then you have to start with the invoice and work your way backwards. I guess another thing I should add to that is it's possible that you can't edit the bill. Maybe it's not even been reconciled. You can't edit the bill because the item was already sold. So in that case, we still have the same issue. I got to go to the invoice and get rid of it. Once I get rid of it and save that transaction, then I can go back and deal with the bill. Once I fix the bill, I can go back to the invoice and then correct it by selecting the correct serial number. What if, here's another situation, what if you have, the software says you have a piece of serialized equipment that you don't actually have. You went looking for it. Well, chances are, probably, hopefully, you sold it to somebody and just forgot to put it on that document. Hopefully you charged them the correct amount of money. And the reason why I keep saying hopefully is that means, nobody stole it. So chances are you need to find the transaction that should have had that serialized item and put that item on there. And again, just make sure the price is no different when you hit save and close, and it will allow you to do that. However, it may be that you're supposed to have a piece of serialized equipment and you don't have it, and you have no evidence that it was ever sold to anybody. Well, then it's lost. We call that euphemistically shrinkage, but chances are that unit disappeared somehow. It got stolen. Let me show you a trick on serialized items. Let's go to our item list. And by the way, if you don't use it, a lot of your common lists are here. These are in other places, but the common ones are here. So I'm going to go to invoice items. And I've got a filter for serialized. And what did I call that filter? Oh, there it is. I'm in a database that's different than what I'm normally in, so the wording's a bit different. Okay, so I have a filter that just shows me serialized items. And what I wanted to do is just right-click on one of them and go to History. And here in History, you will be able to see everyone you've ever sold this equipment to. In this case, it's equipment. So we have a common item number or model number for this piece of equipment. But we are able to see all of the different people that have bought that particular piece of equipment. And you can rearrange these columns, but you'll also, let me just do that. You'll also be able to see the serial number. So this is a good way to go in and check and see who bought what serial numbers. If you come over to your bills, you will see the same type of information. You will see who you bought that item from. And then you can ask yourself, well, does that match up with, according to the date anyway, does that match up with the correct customer? And you might discover where you picked the wrong serial number. So now you're realizing which serial number you should have picked. You went and found the bill. It matches the same time frame of that job you remember doing. But when you look at that job, the serial number is not the same one as the bill. Well, which one was correct? Probably the bill was correct. May not be. But you may discover that, hey, the bill had the right serial number on it. We picked the wrong serial number. And that's how you could find the correct serial number. But this will give you a rundown of all the serial numbers, how much you paid, who you bought them from, etc. Also, you can go to your average cost tab and see some good information too about what you've been paying for those. But this is my go-to form to try to figure out what the correct serial number was. Maybe you have a scenario, like I said earlier, where you have an evaporator coil that failed under warranty. You returned it to the vendor. You picked up another evaporator coil. You went out there and installed it, and that messed up your serial numbers. Could also mess up your vendor credits and so forth. But that's a common way serial numbers get messed up. How do you fix it? Great help topic on that. If you just go search for that, you'll find it. In fact, why don't I do that? Why don't I show you how to get there, just in case you're not familiar with it. All right, go to aptora.com and click Resources and Support, and the top option there, and search for, who knows, you may have a hard time, like, what do I search for? Just start with like serialized and see what it returns. It may return too many, so you can try to narrow it down. But that'll start giving you a place to look. Handling lost serialized inventory items. Good enough. Let's click it. Now, chances are, if that's not the perfect topic, you are on the right track, and you might find a link to this one. Correcting serial numbers already added. Typically, you'll find related content links, so if this isn't quite the right topic, then you'll find the right topic. So here, you read it, and nope, that's not it. Click on that, and this might do the trick. This will tell you how to fix them. So there's a good topic right there. Now at the bottom, other topics, inventory item adjustments for serialized, how to return a serialized item to your vendor, handling serialized items that are lost. So we have it all covered. We have it all covered. I know because I've written a ton of these. Typically what happens is when over all these years, when we investigate this stuff and we help somebody figure something out, we look for a help topic, there wasn't one. When the case is closed, the ticket's closed, we type in all this information so that it's there forever. That's where you'll find it. All right, moving on. Any other questions Will, before I go? Okay. All right. So we want to look for serialized item issues, look for items that we don't have. Remember, we go to warehouses, see if there's any that are inactive, make sure that there aren't any items in those warehouses. Another thing that you want to look for are accounts payable issues. So I think one place to go is your accounts payable report, and you'll find that under reports. And you know what? I'm going to come back to that, because as long as I'm thinking about this before I forget, what I want to do is open up that aging report that we talked about earlier, AR aging. And this is that one I mentioned that you would pick the account. So you would pick like doubtful or your regular AR, and you may just have one. As of date, keep that in mind, because you can cut this off and preview it. Now this is in the owner's checklist also. If you look at your balance sheet, at the very top, your balance sheet lists all the money that you have, cash on hand. Right below that, in the order of liquidity, right below that could be your accounts receivable, your inventory balance, which is bigger. Typically, your accounts receivable is one of your company's largest assets, and that's why you want to take a look at this. Look at your balance sheet, and whatever that money is, log into your bank account and see if those two roughly match. They won't always match exactly, right? Even right after a bank wreck, but they should be very close. So number one, look at your assets and start with cash. Go to your balance sheet, look at the money, go to your bank, look at the money, and see if they jive. The next biggest asset that you might have is found in this report, your accounts receivable. If I go to the last page, it shows that I'm owed $939,899. Now, hopefully your number is a lot smaller than that. If you look at these columns, you can see how much of that, we'll call it $1 million, round up. How much of that $1 million is current within your company's payment terms? Well, in this case, 15% of it, roughly, $154,000. How much of it is anywhere from a day late to 30 days late? Well, sadly, 564,000 of it. So the majority of it. How much of it is 31 to 60 days past the date you were supposed to be paid? 133,000. Same with 6190 and then after 90. Remember, that's more than 90 days after the last date they were supposed to pay you. If you offer terms of 30 days, then that's 120 days and beyond. So take a look at that and make sure that you are collecting on your money. There's a good reason why phone numbers are an option for this report, so you can get on the phone and start calling these people. But the other thing that I want you to do is just go through this report. And again, hopefully it's not 6 pages, it's not so large. Go through this report and ask yourself, do you recognize these people? Do they really owe you the money? Remember I talked about reconciling your bank accounts, reconciling your credit card accounts? Well, you also reconcile your AR aging account occasionally. You want to make sure that everyone on this list belongs here. Had they paid you? Should you have written them off as bad debt already? Go through here, print it out, and circle and write notes and draw arrows and whatever you have to do. But make sure that everyone on this list should be on the list. It would take a ton of time to verify every single person and every single penny, of course. But what I mean is anyone that knows who we deal with, knows your customers, usually the owner, the bookkeeper, the accountants do, they recognize the names anyway. You're just running through here and giving it a quick look to see if it seems legit. And then you'll investigate any names that you don't think should be here. What's really difficult is to know who should be on here that isn't. But maybe you'll get lucky and you'll say, what the XYZ school district isn't on here. Did they pay us? And you might discover that you never invoiced them. So check this report out and make sure it's legit, because it is such a huge part of your net worth, your company's equity. What I started to do was go into the AP aging report, and I got distracted. That's what I would go into next, but it's the same story. You're going to look at your AP aging summary report. It looks just like this, but instead of money coming into you, which is great, it's money that you owe people. You'll want to look at that report and make sure that everyone on that list should be on there. Do you have any old bills that you need to pay? Chances are you don't. What you might find, though, is an old bill that you did pay or that you didn't have to pay. They said forget it, or they told you to apply a credit and maybe you didn't. You're looking for bills that you don't need to pay that the software thinks that you do need to pay. Again, that's reconciliation. Very important part of your annual look. All right, so you've reconciled your bank accounts, your credit card accounts. You have counted up serialized items. That was pretty easy. You made sure that you don't have any items in warehouses that have been inactivated. You have gone in and looked at your very first transaction date and your last transaction date, and you went and opened those transactions and you fixed them. You changed the date and got them fixed. A lot of things by this point have probably been corrected. You looked for vendor credits that are possibly not legitimate, and also possibly customer credits. You're less concerned really about a customer credit than you are a vendor credit, and you've dealt with those. Another thing that we did is we looked for item receipts that might have been abandoned. That's a good one, because that's money that the software thinks you owe people, and if you don't, by correcting that, your income statement, your balance sheet will instantly approve. And I think we have a question.
Retainage, how to print and reconcile.
Retainage. So that would be job retainage, I'm guessing. Let's talk about that. So let's say that you were in the customer form. And you pushed F1. So notice I pushed F1 and it took me to the help topic for the customer. Right there, just showing you how that worked. And now you type in retainage. And you start with just retain. Retainage or holdbacks on construction jobs. Settings related to it. Chart of accounts. It's going to be a setup issue. Let's click that. So this help topic talks all about retainage. And I wrote this one so I knew it was there. It talks about what it is and how you deal with it, how you set it up, how you fix it. So for those of you that don't deal with this very quickly, maybe you have a customer, a job, you're dealing with a general contractor, and it's a $100,000 job, and you're allowed to bill them ultimately for $90,000, and there's a holdback or retainage of $10,000, and you have to meet certain terms to get the $10,000. Sometimes it's just a matter of watching the calendar, and when a certain number of days go by, you get your retainage. Other times, there's other things involved. It all depends on the contract. But this topic explains how to deal with all of that. And I think I'll let it speak for itself, because I think it does a good job. You can print it out and go through it step by step. It covers every scenario. There's FAQ at the end, and then there's some related topics like AIA billing. If you don't know it, we have AIA billing built into our software. Oftentimes you're using retainage there. So it's covered pretty well. By the way, that's another thing to look at, and that is, do we have any retainage that we forgot to bill for? And that's in our checklist, but here's how that might work. Go to your customer menu, your main customers menu at the top, and open up the invoice list. Now the invoice list actually includes not just invoices, but estimates, sales, credits, etc. what you want to do is come in here and filter by estimates. And then you could further filter by awarded estimates. And then making sure you have the correct columns added to the list and where you can see them, you're looking for awarded estimates that haven't been completely billed or invoiced. So what you're trying to find is, well, we had this estimate for $25,000, and you might have billed them $20,000 and forgot to bill them $5,000 more. Or maybe you did and the software somehow doesn't know it. That should have come out before. But what you're looking for is, it's like discovering gold, assuming you can get your money. What you're looking for are estimates where you haven't created the invoice yet, or you haven't invoiced for the entire amount of the estimate. Another place to find it, but you have to know what you're looking for, is when you go into your customer history, you will see in the invoice list, it was a progress invoice, and you'll see how much of the job has been invoiced there. There's other places to go as well, but I think the invoice estimate list is the best place to go. Again, create a filter that says show me estimates that were awarded, and then you can add another filter if you want, but you don't really need to. You can just sort the column. You're scanning for estimates that haven't been 100% billed or invoiced. Now here's a problem though. I said awarded. What if you forgot to mark the estimate as awarded? Well, now you have to check that too. You have to go look at your estimates to see if any of them were awarded and you forgot to mark it as awarded. And that's much more difficult. But if you do these things on a monthly basis, quarterly, 6 months, annually, it won't be a problem. It's just that when someone gives you advice on these things and you haven't done it before, your first time going at it can be rather difficult. Question, Will?
Is there a report that we can provide to our accountant that would clearly show retainage by customer by job? The retainage does not show on the AR report.
Yeah, so, and the question was, and I think we cover this in the help topic, is there a report that we can clearly show our accountant retainage? So remember, retainage, well, you may not remember this because you haven't dealt with it before. Let me remind you. Retainage is an item, and it enjoys all of the reports that any item enjoys. By creating a retainage item and adding retainage to an estimate and creating an invoice for the estimate, you now know which items have not been invoiced for, and the software keeps track of that. Through progress invoicing, it knows what items were on the estimate, what items didn't make it to the invoice, or if they did, which ones haven't been charged for, or if they have, which ones haven't been invoiced for the entire amount. We also have item history. We know everyone we ever sold a retainage item to. So we have all that information available to us. There's many different reports that could help you with that. There's also a custom data view that was written specifically for retainage items. But remember, if you follow that help topic in setting up retainage, then retainage is an item. Another thing that can be handy is creating another accounts receivable account that you use just for progress invoicing. And now you have another accounts receivable report that you can distinguish from your everyday run-of-the-mill, they owe me money, service calls, replacements where you should have got paid, you left without getting paid. For jobs that you really want to keep an extra eye on, you could create another accounts receivable account. Maybe it's called AR progress billing, for example. And that'll give you yet another set of reports that can help you. Also, retainage, by the way, is going to be showing up among other places on your balance sheet. So you'll be able to look at your balance sheet and ask yourself, why is retainage not on here? Or why is retainage on here? Why is retainage such a big number, such a small number? You have when you create retainage the way we recommend, you've got a ton of information available to you to check that out. All right. Let's see. Where was I? We were talking about the estimates, trying to find estimates that have not been completely invoiced for. And again, one key is marking your estimates as awarded. It makes it a whole lot easier to go discover those. But you wouldn't be the first, and it's on the checklist here, but you wouldn't be the first to find out that you forgot to invoice somebody for the remainder of a job or for the job in its entirety, and now it's too late. Maybe it's too late, you're not going to get paid. That's happened to people that I know, unfortunately. They just couldn't get the money, and it's over. It's a lost opportunity. So every month, every 6 months, certainly annually, quarterly, you should be looking for those opportunities. Because again, it's like finding gold. I have one particular client who was really struggling for money. Cash flow was a real problem. So we went looking for a lot of these things. And fortunately, we found a number of situations where we were waiting on a job to start and it kept getting delayed. This is back near the COVID time. But there were jobs that they had sold and they could have invoiced them and forgot to. And the reason why they forgot is because they didn't really have a system in place to help guide them. But more importantly, and what was unusual, is that the job was getting delayed over and over again. So normally these jobs would start pretty quickly and they would realize, gee, we forgot to invoice them for setting the equipment on the property or whatever the terms of the contract were. So we ended up finding a lot of opportunities to invoice for jobs that they weren't invoicing for. Hopefully you will too. All right. Talking about reviewing, we were talking about reviewing your accounts receivable first, because that's money coming into you. Then you might review accounts payable. I say you might because chances are you're paying your bills correctly. But what you are looking for is possibly bills that are not legitimate. They've been paid or they should have been eliminated or dealt with in some manner. The next thing you want to look for is sales tax payable. It's related. Look at your sales tax payables to see if that jives with what you think they should be. There are plenty of reports that you can go into. Probably the go-to report is reports, sales tax, and sales tax liability. There are other reports if we have to dig further. But this one's good because it'll just give us a quick overview. And I will keep talking to fill dead airspace while I watch the progress bar on my other screen. And it's almost there, and here it is. Okay. All right, so once that report comes up, it took a long time for just one page. It has a lot of stuff to look at, though. And yeah, the number was really big. So yeah, it seemed like a long time for one page, but look at the number. Hopefully yours isn't anything like that. So this could have been an adjusting journal entry. That's another way to mess things up. And instead of fixing it properly, you can try to make an adjusting journal entry to fix sales tax or payroll liabilities. Anyway, this report shows you how much you owe, who you owe it to. If it doesn't look right, and this should be cleared pretty much every month, right? If it doesn't look right, then you can dig further. But the whole idea is to ask yourself, do I really owe this money? Now, chances are you don't have to worry about, do I owe money that's not showing up on this report? Because that is rare. I suppose it could happen. But you're really worried about, do I actually owe that money? Now, what if you notice on this report, or you could have gone to your balance sheet and you would have saw sales tax payable. When you see that number and you say to yourself, I don't owe $4.9 million, we pay that. Well, that's good for you because the software thinks you owe a bunch of money that you don't actually owe. But more importantly, how did it get on there? Your number probably wouldn't be that large, but it's very common for people to find that the software thinks you owe payroll liabilities that are paid, or the software thinks that you owe sales tax liabilities that have been paid. How does it happen? Here's how. Whenever you pay your sales tax, the way to do it, and the only way to do it, is to go to your sales tax and, whoop, I'm in the wrong menu. That's what happens when I'm talking. Go to your customers, sales tax, and go to pay sales tax. If you don't pay your sales tax here, the software doesn't know you paid your sales tax. So there may be a time where somebody they're in the role temporarily or filling in for somebody or helping out. They might go online, they might pay sales tax, and they might go into the software and write a check. Well, you've paid your sales tax, the money came out of your account, all of that's good, but the software doesn't know you paid your sales tax. Sure, it sees the check. It probably even warned the person because we have code in there that looks to see if you're maybe paying sales tax or payroll liabilities, and we warn you that you're not in the right place. But forget all that. We did it anyway. The software doesn't know you paid your sales tax. So when you come in here, the liability will show up in this form, even though it may not be legitimate. How do you fix it? Guess what? There's a help topic on it. But you have options. You can go get rid of the check, void that check, put in a good memo, come back in here, pay it, backdate it so it matches that check, and you're good to go. And there's some other options as well, but no adjusting journal entries, please. What about the payroll liabilities? Same story. We go to employees, pay payroll liabilities. That form opens. You look at all these numbers. First of all, get your date ranges correct. And remember, pay dates and payroll date ranges can be different. So there's usually issues with date ranges in here when you're not seeing what you thought you were going to see. But anyway, look at these numbers and just ask yourself, do I really owe this money? And chances are, if there is a problem, it's a small number, but you fix it in the same way. You have to go find where you paid it incorrectly, unwind it, come back in here, pay it, backdate everything. You're good to go. There's other options. That's how that happens. Okay, so you're reviewing your payroll liabilities. You're reviewing your sales tax liabilities. Page 5 says, probably can't see that on camera, rounding accounts review. We talked about that earlier. If you just joined us, somebody had a question about a rounding account. People often ask, how did I get this rounding account? We didn't add it to the software. I ran my balance sheet, never saw it before. I got a rounding account. Well, we create the rounding account rather than fix it for you behind the scenes. And there's ways to deal with that. And we cover that on page 5. And we also have a good help topic on that. By the way, in this document, which I wrote, the one thing I wish I would have spent more time on is adding links like here. You probably can't see it, but there's a link here taking you to a help topic, aptora.com/help/rounding account. Easy to remember, right? So it tells you how it happened, how to fix it quickly, but it assumes that you know these things about the software, right? But there's a link to a help topic if you don't, and that'll tell you how to correct it. So for that person that asked that question, if that help topic doesn't fix it, then we need to know more about it so we can help you with it. All right, so that takes us through basic monthly tasks. I did skip some things for the sake of time, and we need to wrap this up pretty quickly. The quarterly procedures, like I said, those are all of your monthly procedures plus some. So on a quarterly basis, we would want to go in and review loans. One way to do that, well, let me just show you. One of my favorite places to go, which a lot of accounting people wouldn't do this probably. Maybe they wouldn't agree with it. But I like to go to the balance sheet just to see if I need to dig any further. Make this a little bigger for us. All right, so here I am looking at the balance sheet, and as you probably know, the balance sheet shows all the stuff I got, called assets, and all the stuff I owe, called liabilities, and whatever's left over is our equity, right? So here we are looking at all of our assets. We talked about that earlier, cash on hand. Do you have that much cash on hand? Is it close? Is it totally far away from that? Your accounts receivable, are you really owed $1 million? Your inventory, does that seem about right? All right, well, here's where I wanted to go. Let's go to page 2 and look at our loans. So here I have a loan that I just created for this new truck. $45,000. Yep, makes sense. We haven't made our first payment yet. But what about these? Does that look like, without being able to prove it, does that look like the right amount? Because according to the software, you owe $56.33 for that truck. You owe that much for this truck, that much for this truck, and that should have been paid off. We paid that off a long time ago. That's the kind of thing you're looking for. The balance sheet, again, shows you assets, the trucks, but it shows you liabilities, the loan on those trucks. If you, of course, don't borrow money for your trucks or for your equipment, then you won't find it here and you can skip that. But if you don't see loans on your balance sheet and you know you have loans, that needs to be fixed. Those loans need to get on your balance sheet. If those loans are made by the company, they need to be on the balance sheet. So that's a good to-do item. I have many clients I work with that say, no, we don't have any of those loans on our balance sheet. We got to get that on there. So the first thing we do is we go to the asset manager. We add all those vehicles if they haven't done so already. We get the assets on the balance sheet, and we get the loans on the balance sheet. Every time you make a payment, one line should be interest and the other line should be amortization. It should go against the principal. Each month it's a little different, so you're doing an interest schedule or so-called amortization schedule. You're trying to figure that out in the software. And that way, every month when you write the check, and typically you're just writing a check after the fact because it happened electronically, right? A lot of times you do this in your bank rec. You'll see that the truck payment was made. That's a reminder to go add it, or maybe you've memorized it and you have to go correct the memorized transaction so that the interest is right. Well, here's what it would look like. Go into your loan amortization calculator under Tools, Calculators, Loan Amortization. And put in the loan of, say, $45,000, which is what I did earlier. I'm going to get serious, put my glasses on for this. So we bought a truck for 50 grand. We gave him 10,000 down, so I'll clear that. It's already been given to him. We're not making an extra payment. And the years for the loan, 5. And we don't need to see an option, so I'll clear that. We don't need 2 rates, clear that. And the interest rate was 5%, pretty good rate. Put in 5% and click payments. All right, so it's an $849.21 payment. We would not want to write a check simply for $849.21. When we write our check, we want one line to be the interest amount, and we want the next line to be the amortization or the principal amount. And how do we know that? Well, let's just highlight that. There's instructions to tell you this, but you highlight that number and click amortization. And there's your amortization schedule. And you can right click on that and copy it. Different ways to do it. Let's see, I haven't been in the menu. Export to Excel. So you can export that to Excel. And that's your amortization schedule. So when you write checks, now you know how much each one should be. And that means that every time you make a payment on a loan, your balance sheet will reflect the amount of equity you have in that asset. It will reflect the amount of debt you still have remaining on that asset. And if you go print your income statement, you'll have a line on there called interest on loans, and you'll know how much you've been paying for interest. All right, I mentioned the asset manager. You would go to company, asset manager, you'd enter your vehicle, and let's go find the one I entered recently, and it was the 2025. Oh, maybe I put it in a different database. Let's see. I'm just pretty sure it was in here. I'll look one more time. Nope. Wasn't in here. All right, no big deal. I'll just open one up. So you'll put your vehicles in here. You can even do your depreciation schedule here. And you'll be ready to set that up. Now, is there a help topic on that? Yes, there is. There's a help topic on that. So it covers the whole thing, how to do it, how to set it up. All right, so quarterly, you're doing all your monthly, but then you're checking your loan balances to make sure that they're accurate. You reconcile those, right? You would log into the website of Capital One or XYZ Bank. You'd figure out how much you owe, and you'd check that against your balance sheet or other documents and see if they match. All right, I think that's probably a good time to stop. What I haven't covered is full inventory reconciliation, full liability review, look at your long-term liabilities versus short-term liabilities, adjust those if you want to for extra credit, doing a fixed asset and depreciation review, and it goes on. And you're welcome to download that document. And I think, Will, you have that ready for them, don't you?
We're going to send it to them.
Okay.
Through email.
Okay. All right. Very good. He's going to send that out to everybody's email address that you used. And I think you'll find it's quite helpful. If you have any suggestions on that document, like I said, it's about 15 pages, so it could have an error, could have an omission. I might have left something off. If you have any suggestions, please let us know, because I like to keep improving that stuff over time. Were there any final questions or comments from anybody? All right. Once this gets on YouTube, then please feel free to leave your comments and questions below. And if I see those, I will address them. Or if one of my coworkers sees them, we will address them. I want to remind everybody about Aptora University, and remind me of those dates again. March 17th through the 19th. I'm paranoid that I will give the wrong dates out. So it's March 17th through the 19th, 2025, Aptora University. Come here, Kansas City, come to our place, sit in a classroom, look at a giant screen. We put a computer in front of you. It's 3 days of intensive workshop training on Total Office Manager. We also talk about our mobile app and other utilities as well. But you will absolutely learn things you didn't know, no matter how advanced you are. I can promise you that. Everybody says that. There's a lot of aha moments for sure. All right, with that, I want to thank the people behind the camera, Alicia and Will, for doing all this. And thank all of you for sitting through my scratchy throat. Hopefully I'll be through this by the time I travel. Thanks for being here. I appreciate it. On behalf of everybody at Aptora, thank you very much for being our clients. We really appreciate it. And I'll see you in the next video.